Ladies and gentlemen, we are live. All the world can see. I'll wait for everybody to get in here. I know all my fan base, all my subscribers will soon be here. I'll be waiting. Let's discuss the recession 2024. Ladies and gentlemen, I think the US economy has a serious problem. Okay? I'm just going to say it now. And I don't have any viewers right now. But the way I see it is very clear. I'm not an economist, but I don't trust economists at all. Their predictions are hardly ever right. But then when you look back in hindsight, it's so obvious what's going on. It doesn't take much clever analysis to understand how these business cycles work, you know? So the main thing that I basically want to say is that right now, the movement of the S&P 500 is being driven by the expectation that interest rates are coming down, right? The expectation that the economy is recovering from the interest rate hikes that caused the economy to decline in 2022. Now, this is a falsehood, in my opinion. Let me correct that. The interest rate hikes that caused the economy to decline in 2022 and 2023. This is a complete falsehood. The interest rate hikes have a lag period. Okay? The interest rate hikes started in March of 2022, right? They didn't get significant until about December of 2022. Now, typically, if you look at the history of the Fed funds rate, it takes about a year and 6 months for Fed funds rate to echo through to the economy in terms of really affecting unemployment and economic activity and so forth. Because adjustments need to be made, you know, all these things take time to echo through the economy. We haven't had that time. We haven't even felt these interest rate hikes yet. We don't even know what is coming. There is a tsunami coming. That's the thing. That's the thing that I don't understand how people can say, Oh, it's a soft landing. What the fuck are you talking about, dude? I, and the search rate for recession has gone down completely. It's like what we experienced in 2023 was just simply a reversion to the mean from 2022, which was a revenge tour from 2021, which was a boom year, from 2020, which was a decline year. It's like a cycle, okay? 2020, 2021 was massive stimulus. Fed funds rate dropped in 2020 as a result of COVID. That provided a massive, and then the stimulus got pumped in. Boom, boom, boom. 2021, everybody's spending. Boom, boom, boom. Massive economic activity. Bam, 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 bam. 2021, 2022. Oh, okay. Let's relax a bit. Let's relax a bit. Okay, we spent too much in 2021. That was a bit too much. That was a bit. We're tired out a bit. We're tired out a bit. Whew. Let's calm down here. Let's calm down here. And now we're seeing growth back up again. 2023, we're seeing the growth again. We're seeing the growth again. We're seeing that growth again. We're seeing it. But we're not seeing the interest rate tsunami that's coming yet. Because that lag period of the 1 year and 6 months or 2 years that typically takes for that lag period to take effect hasn't rippled through the economy yet. Okay? That's the one thing. Okay? So this soft landing narrative is a complete fabrication. I'm just going to say that right now. And mark my words on this. Okay? When we look back a year from now at this video and I point to this video and I point to my put options, my long put options that have printed on QQQ, and I'm going to be laughing to the bank. I mean, I'm not going to be laughing because, a lot of people are going to be underwater. It's not going to be funny for them. But the point is, we got a tsunami coming. And this soft landing narrative is just complete and utter bullshit. That's the way I see it. And that's the way it is. If you look at history, that's just how it is. The Fed funds rate controls the economy, dude. If you raise the Fed funds rate in a rapid pace, as we saw in March of 2022 through December of 2022, you're going to see a massive increase in unemployment within 2 years. Now, it can take longer than 2 years actually. It depends on the strength of the economy going into that. Now we were sloping down from the 2020 Fed funds rate coming down, so that's going to help a bit. As we see, initial claims right now are at the strongest, at the lowest level they've been in a while. And if you look back in history, actually, if you look at July of 2007, right before right before the 2008 financial crash, right before that kind of took off, initial claims were very, 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 very low. Go look back. Go look at Fred. Go look at the charts. Go look. Just go look at the charts. Go look at the charts. History just repeats. History repeats. People are fucking sheep. They do the same thing over and over again. I don't know why. I don't know why they never learn. I don't know. You just look at the charts. I don't understand it. People call themselves economists. I don't understand why you can't just look at data. I don't understand it. I don't understand why you can't look at a simple chart and see that this is. I feel like there's a lot of deception going on, to be honest. I feel like there's a lot of people who know the truth and who are trying to deceive people and who are selling their assets right now and who are selling the soft landing narrative to sell off their assets because they know that deflation is coming and holding the US dollar is going to be a valuable thing to do right now. This inflation thing is it's over, dude. If you look at the M2 money supply, what's happening to it? It was going up, up, up and away. What is the Fed doing right now? They're cutting the balance sheet. They're cutting the balance sheet. They're keeping interest rates at an extremely high level relative to where they've been out for the last 15 years. That tsunami is coming. And that tsunami is going to last a long time. The longer they keep it at that high level, the longer that tsunami lasts throughout the economy. That's just the way it is. Okay, that's part one. That's part one of my thesis. Okay? It doesn't matter that nobody's here. This can be a video that's saved, and then I'm just gonna, just put it on my channel, and we'll see what happens. This is gonna be my prediction video. Part two. AI. The AI narrative. Another complete, an utter. I'm not gonna say it's a fabrication because it's not. Like AI, it's a real thing. I think it's gonna revolutionize the world. I think we're heading towards, a much brighter world through artificial intelligence. I do think that. But I don't think it's going to happen overnight, like everybody's thinking it will. For example, look NVIDIA. It's a hardware company. Why is the company trading at such a level where in 10 years the PE will be 10? If they meet these optimistic growth expectations and keep that revenue growth in a cyclical business, and you only get a PE of 10 then in 10 years. What? Dude, that doesn't make any sense. I'm sorry. That makes zero fucking sense. You're getting a 10% yield in 10 years, given an optimistic case in a cyclical business, in a hardware space, and you don't know the future of the fucking industry. You don't know how competitive it's going to be. You don't know, like, there is so many assumptions being made here. That goes for every company, by the way. Like, you can say, oh, Microsoft, they're they're just going to outperform everybody. They're going to beast mode, man. Microsoft, who's going to take them down, man? They deserve a 35, 40 PE. Let's just give them a 50. Let's give them a 60 PE. They're like a bond at this point, man. We can get a 2% yield. I don't care. What? Dude, like, you can't just keep giving them a higher and higher PE. That's not how fucking business works, dude. Look, here's what's going to happen. And this happens throughout history. Other companies come in and go, we're better than you. You've matured. You've saturated the market. We've got a better product than you. Your CEO strayed away. You've lost it. We're coming in. We're replacing you, buddy. You can't assign these high multiples and assume that everything is going to be rosy fucking 30 years down the line. You can't just make so many assumptions, dude. That's not a productive way to make investments. And that's why these valuations are absurd. It's not because I think that AI is not a revolutionary industry. I think it isn't a revolutionary industry. But it's that the valuations being assigned to these companies are such that, oh man, you're just making so many assumptions, man. It's not there yet. It's not there yet. And you're also assuming that AI is going to be developed very, very quickly. And this is bringing back memories. Not for me, really, because, I was 6 years old. But remember the 2000 tech bubble? Remember the internet? The internet? The thing we're on right now? The thing that, to be frank, is like everything right now? I think AI will be everything. But remember how the internet took like 20 years to really take off? Actually, it took way longer than that. I mean, I think it was developed in like the 1970s at first. But why should we think that AI is going to be any different? Why should we think that AI is going to be like next year we're going to be like talking to a hologram? I mean, yeah, there's some cool technology like the Vision Pro, but it's not exactly the kind of revolutionary general intelligence that we would need to justify paying such an outrageous multiple for a company. You need to replace. Now here's where my bullish side comes out on AI, because there is a side of this where I think, okay, you could think of AI as an exponential curve, right? Where the development of AI could lead to exponential improvements in efficiencies, which could lead to exponential growth in profits, for instance. But my argument to that is that, hold on a second, hold on a second, hold on, hold on, hold on. Remember, remember what capitalism is. It's competition. It's competition. You have multiple companies competing. So this company has AI, this company has AI. They're both using AI to compete with one another. This company is offering a product or service. This company is offering a product or service. Oh, this AI is really increasing the efficiency. I can offer this product or service for a lower price. Oh, this AI is also increasing efficiency. I can offer this product or service for a lower price. I'm going to offer it for a lower price in this company. I'm going to offer it for a lower price then. I'm going to offer it for a lower price then. Margins go down. We return to earth again. It's not exponential growth in the end. You know, like, even if you extrapolate that AI will generate so much value that you can justify paying insane multiples for companies decades ahead of time, right? Which maybe you can do. You know, I can't predict the future, but I can tell you, like, mm, you're going in assumption land again. You're going in fantasy land again. You're not in objective reality land, for sure. You're in your fantasy world again. Um, I say, but should you do that in an environment where a tsunami is coming, a tsunami of interest rate hikes, which has historically always resulted in a massive spike in unemployment, a recession, a massive consumer demand drop, a massive level of deflationary pressure, a massive level of business trouble. And there's only so much the government and Fed can do, you know. At this point, you know, investors have gotten accustomed to the fact that, oh, the Fed can just, you know, magically fix everything, and just the government can just print money, and everything will be fine and dandy. To a certain point. But you have to understand, my friend. You have to understand. We're in a situation right now where it's hard to do that. It's hard to issue stimulus after what you just did in 2020. Don't you see that? It's very, very, very hard to do that. It's very hard to like get the okay to do that. You know, they'll probably do it though. I'm not saying they won't, but is that really going to be the magic bullet that solves all the problems? It's just going to cause more inflation if they do that. Okay, kick the can down the road. Sure, let's do that. Let's see. That, like, uh, I honestly think, you know, that chess game doesn't end well. So saying they probably will do it probably means they won't do it. Because if you play that chess game out in your head, it doesn't end well if you kick the can down the road. It's much better, actually, to play it out like 2008, to let the thing collapse, to rebuild from the bottom, to let the thing and to rebuild. That's called a business cycle. That's called the natural course of things. We're at a level of excess that we haven't been at for a while. And it's built up ever since the end of the start of the bull market in 2010. And it's really been like exacerbated by the stimulus of 2020. I mean, whew, man, gambling has been zero interest rate environment. It's like everything has been geared to a higher and higher level of just speculation and greed and wealth inequality. There's a high probability of stuff crumbling if the government does stupid things like that. So you have to weigh these risks of issuing stimulus in times of a collapse of the economy, which I predict to happen this summer, or possibly a little later, possibly a little earlier. Right now, I have about a quarter of my portfolio in QQQ puts out of the money, about 25% out of the money. And I believe those will print, and I'm gonna keep buying them as the market goes up. And that's that. And I think that it's pretty silly. It's pretty silly out there. The soft landing narrative, it's a joke, frankly. It's an absolute and utter joke.